And a good example of what he's talking about is playing out in the oil market, where relationships matter. We've got the U.S., which has been trying to pressure Saudi Arabia to boost production. We did see OPEC plus nations commit to more production this week. Let's get more on the oil outlook. Mike Rothman is founder of Cornerstone Analytics, which tracks the energy market. And I've said it a few times this week, Mike, but I'll just remind our audience, I mean, Russia has played such an important role over the years in the success of OPEC plus. Then when we're talking about the U.S. and comments to get OPEC-related nations to work in coordination with the Americans, let's not forget the Russia equation here as well.
Well, Russia participating with OPEC, starting really in November 2016, was something that OPEC and the Saudis in particular have been working on since the mid-'80s. So their involvement mattered because when demand got crushed after COVID broke out and the isolating and containment measure happened, the cutbacks in production prevented a cataclysmic build in stocks. The issue with Russia over the last few months, though, is the prospect that their supply is going to be disrupted. And the oil market had no room for any kind of losses. That's why it's been such a critical factor. And the oil market, of course, had been tightening dramatically in the last year. We had the largest inventory draw in storage on record.
So if we put all the pieces together, because there are a lot, Mike, and it does get complicated, but we're into the summer season. We're watching the health of the economy. But for now, people doing a good amount of traveling. There's been pretty strong demand. Refining capacity has seemed to be fairly tight. I would imagine some OPEC-related nations could be pumping out more oil, and there's only so far they're willing to go there. And you've got many nations that are trying to distance themselves from Russian supply. But then there's this overarching question about whether or not oil demand starts to cool off if the economy globally really starts to weaken. So lots to think about. Where do you think oil prices are headed?
Well, that's why we have a job, right? It is a Rubik's Cube.
Yeah.
In terms of where oil's headed, the call that we've been making for the last 20 months, give or take, was that prices would rise as the economy recovered and oil demand recovered. And it was based very clearly on the prospect that the recovery in demand would be disproportionately big versus the recovery in non-OPEC supply. A lot of people had thought that the oil market was going to stay perpetually oversupplied. They believed that U.S. shale was going to solve the world's oil problems, etc. And the fact is, there really is no way we're going to get around oil demand continuing to grow as the economy expands. It grows at about half of the rate of GDP. However, for the last 8 years, we have not had the investments needed for non-OPEC supply to keep up. And of course, we have a number of countries in OPEC that are facing significant issues like Venezuela, Libya, Iraq. So when you say, where are we going? The answer from our perspective, very simply, is still higher. We don't think oil prices are anywhere close to a level that threatens economic activity. You need the price of oil averaging for a year north of 130 for that to become a real topic. And it doesn't choke off activity until you're literally averaging somewhere around 180, which we are nowhere near. So right now, when we talk about the outlook, what we see happening is supply issues staying significantly. Can you see me?
Yeah, we can. Yep.
Okay, sorry. My phone started doing something funky. Sorry. So we see supply issues as still being the most critical here. In fact, if you look at the term structure or the time spreads in oil, underlying psychology is clearly much more worried about supply issues than demand issues. We know there's macroeconomic headwinds. I don't think anybody would disagree with that, but we're not seeing it manifest in oil demand. Oil demand is actually growing right on forecast.
Before I let you go, Mike, just one thing that I will hear from some people is, well, hold on a second. You've got not just Tesla, obviously Elon Musk back in the headlines today, but all these big automakers that are committed to these electric vehicle fleets. You made that reference to U.S. shale, and we sort of saw that past conversation about whether that would address the supply-demand story. What do you think, or what would be your message to people who are looking at steadily increasing EV sales? Maybe EV sales find, a bit of a lift if these high gas prices remain, for the next few months, et cetera, et cetera. Does that adoption change any of the thesis when it comes to the price of oil?
Not at all. Zero. Electric vehicles, as much attention is being focused on them, is very inconsequential for the oil market outlook for, you could talk about the next couple of decades. There's about 1.3 billion cars in the global auto fleet. There's something like 15 million electric vehicles in the global auto fleet. It's a tiny, 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 tiny percent. And even when we talk about the global fleet expanding, the growth is going to remain disproportionately for cars, vehicles that run on petroleum, not electricity. So it's a big virtue signaling issue, the idea of electric vehicles and the world somehow quitting oil. But from a practical perspective, it doesn't really matter.